Good morning and welcome to this weekly market update by AGM Markets. Today is the 24th of September 2012. What we'll do today is go through some forex pairs. So we'll go through euro dollar, cable, dollar yen and dollar Swiss. We're not making any trade calls or recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website www.agmmarkets.com. If any new follows, we have 3 moving averages on each of these charts. Red one is a 55 simple moving average, the purple is a 100 simple, and the gold is a 200 simple moving average. Okay, let's have a look at the euro dollar. So what did we have last week? I mean, if we quickly flip it to the weekly, you can see, I mean, what I'm really focused on the weekly is this downtrend resistance. I mean, we said last week that we were, I mean, the odds are kind of for some sort of retracement. The odds were looking like, what's going on there? The odds were due some sort of retracement, mainly being because of the amount of daily candles that we had in a row. I mean, we had what, 1, 2, 3, 4, 5 daily candles, and that's 5 weekly candles in a row there. And this is obviously after all the QE that the Fed in the US did. I mean, leading up to that, the sort of expectation brought the euro up, and obviously the dollar weakened. And now that it's come out, you sort of many times, if you look through the past over the history, amount of times that these sort of things like QE do get built up, and then it's sort of already priced in, and when the news comes out, then the market does completely opposite to what people to what people think should happen. So this is a sort of classic case that's already happened, and that's already happening. Sorry. But I mean, in terms of the technical, not we'd like to talk about the fundamentals too much. And in terms of the technicals, we had 5 weekly candles, bullish candles in a row, and we said, look, the odds of some sort of retracement. Of course, it could still go up, but surely a healthy retracement is on the cards, and that's what we got last week. A classic sort of retracement candle. There's still a bit of lower wick in that candle, so the buyers were still there trying to push it back up, but a pretty standard bearish candle. And you can also see it coincide with this trendline resistance that we've got on this weekly chart, and also this 55-week moving average, which is kind of in between. So yeah, that's basically what happened last week. So I mean, in terms of buying opportunities, I mean, the one fib I'd definitely be looking at for in terms of any buying opportunities would be this fib here from the lows at around the 120 level to the recent highs. And for a healthy retracement, the 50% retracement comes in at 1.2601. So a long way away from that yet, but that's what I'd be focused on the weekly. In terms of the daily, a similar sort of picture in terms of what I'm really sort of focused on, because I do believe that there should be a further retracement this week. I'd expect some sort of further retracement. Yes, you can have that same fib drawn up, sorry, from those lows to the highs, but also we have this 200-day moving average in the way here, which is stand at 1.28, and that's starting to flatten out quite some bit. And when they do end up quite flat, they do tend to act as good supports. So keep an eye on that if we do get there this week. It is looking like it will. I personally, if I was to have a wager, I would say that we would come down to this level this week, because it's looking like it just wants to have some sort of healthy retracement. And of course, if we break and close below that, then I'll be looking for the 50% retracement, which could also coincide with this 55-day and 100-day moving averages, if we do get to that sort of level. Because remember, the moving averages change with each candlestick, so it'd be interesting to see when we do, if we do continue to sell off, where these moving averages will be. But no, it's looking very, very technical indeed, and that's what I'm really focused on. To us, I mean, in terms of short-term charts, nothing much of interest there. The 4 hours been very, I mean, last week was a very, very sort of choppy price action week, so I'd be keeping the bigger picture in mind, to be honest with you, and just focus on these more longer term charts. That's what I'm focused on anyway, this daily chart. Cable, quickly flick, let's just keep on the daily. Well, let's have a quick look at this weekly. Similar thing to Euro, we had 1, 2, 3, 4, 5, well, 6 weekly candles in a row last week. Start to stall a bit. You can see that big upper wick there. So similar thing, I'd be looking for some sort of tracement really on cable. And one thing we did say on cable was to keep an eye on this resistance zone. If you look to the left of the chart here, it has a key spike high there where we've got a big significant sell off there, about 10 big figures. And you can see, surprise surprise, where are we at now? We're starting to stall at this one spot, 62.76 level, and it's looking like it wants to sell off again and have some sort of healthy retracement. So similar picture with the euro really. If we do get any further retracement, then keep an eye on these moving averages. It looks like it's definitely due a healthy retracement in my opinion, so that's what I keep focused on. Some people will be keeping this sort of trendline support on there. You can keep that there, but I mean, I would not be. It tends to want to come back to the moving averages cable. You can see around here, let's say when we got that big drop off there, 10-figure drop, it wanted to come back up, and surprise surprise, what happened? It stalled at the 200-day moving average. So if we do get a sell off here, then I'd be looking for the 55-day. But I mean, there's nothing stopping that trendline support from holding, so keep an eye on that. Dollar yen, very very choppy chart still. When you look at that daily, the recent sort of price action there, very very choppy. I mean, the weekly, nothing much of interest either, apart from this trendline support here, which is still holding. But in terms of the daily, I pretty much just keep that trendline support and also this trendline resistance around here, but we're still, I mean, we're quite a long way away from that. You can see that got held off last week actually. That was a key seller. You can see the last few days where last week was pretty much every day was a red candle, so it looks like it's wanting to come down and test that trendline support. If you're a buyer in the market, then I'd flip to the floor. I mean, keep on the daily actually. Zoom in and look at this recent move here on the fib move from the lows here to the highs. You can see we're near the 61.8 retracement, but not a massively interesting chart to be honest with the dollar yen. Much prefer euro and cable. I think they're much more interesting charts and technical in my opinion. Okay, let's have a look at dollar Swiss. Dollar Swiss, this is the daily chart. Trendline support there, that's what I'm keeping. You can see that the recent sort of candle action around this trendline support, but you can see it's reacting very well to the trendline, and when that happens, it's definitely worth keeping on your charts. Because I mean, if the price action is acting something technically on the chart like a trendline or a fib, it's worth keeping on the chart, because obviously a lot of people are looking at it, and a lot of big players are looking at it. And yeah, I'll definitely keep that on my chart, that trendline support. As you see, it's holding well. Also, I had a look at this just before doing the video, doing some research. If you draw a fib from the lows to the highs here, we have a perfect bounce off of this 50% Fibonacci retracement level. See around here, it's pretty much a confluent zone with that trendline support. So similar, well, I mean, once again, it's a kind of mirror image of the euro dollar chart. When euro dollar had that trendline resistance, and dollar Swiss we have a trendline support. And I'm sure if you flip it over to euro and you draw a fib, let's say from the high of this chart to the low, I would not be surprised if it's at a fib level. Surprise surprise, it's at 50%. Complete mirror image chart of dollar Swiss there, which is very interesting to see. So yeah, I'll keep that on the chart, and just stick it, keep to the daily chart. It looks like it's wanting some sort of healthy retracement after such a big sell-off down here, and you can keep the trendline resistance there as well, just to keep that in mind. If you do start to come up and look for sort of maybe some opportunities, if you get to the trendline resistance here, keep it. Just look at the action really, see what happens. But once again, to get any sort of further momentum towards the upside, we have to get above this 200-day moving average, which is starting to flatten out. Similar to euro as well, and that 200-day moving average comes in at 0.9407. Okay, that's all for the charts. Have a look at the Forex calendar. Very quiet day today. We've already had some German IFO business climate data out. That was a weaker number as well, helping the sort of euro surf. It came out 101.4 versus 102.6. Tomorrow, the main headline data, we have some Swiss and Canadian news there. At 2 p.m. we have ECB President Draghi. That'll be key to keep an eye on there. At 3 p.m. out of the US, we have US CB consumer confidence data, forecast at 62.9, previously 60.6. On Wednesday, very quiet day, and we have some medium impact news here. But in terms of the high impact news, we have US home sales at 3 o'clock, forecast at 381,000, previously was 372,000. And on Thursday, quite a few bits of high impact news here. At 9:30, the UK current account, which is forecast at minus 12.12 billion, previously was minus 11.2 billion. Also have a UK final GDP. Yes, that is medium tier news, but keep an eye on that because that will affect the markets, especially if it misses the number. We also have an Italian 10-year bond auction, which is tentative throughout the day. At 1:30, we have some US data. We have US durable goods, the core number being the focus here, forecast at 0.2%. From the previously shocking number at minus 0.6%, and we have the weekly jobless claims at 378,000. Forecast number previously was 382,000. Now at 3 p.m. we have the US pending home sales data, month on month, forecast at minus 0.7%. From the previously positive 2.4%. So that's interesting forecast numbers there. And on Friday, a lot of mid-tier data here. French consumer spending, German retail sales, etc. The main news for any of you that trade the loonie, we have Canadian GDP out at 1:30 GMT. That's forecasted to stay the same from its previous number of 0.2%. Okay, and that's all for today. Hope you enjoyed this video. And yeah, have a great week trading. I'll catch you next week. Thanks for listening.